Hey guys, welcome to the stream and thanks for joining. It took me a bit of time to get this set up, but now we are here and ready to discuss a couple of important things here. And also we are going to be taking a look at some of the past things we have spoke of. Hey guys, welcome to the stream. Because it is going to be pretty nice to see how everything was panning out and working exactly the way as it was expected and how we expected things to be happening on gold especially, which was really mostly, I would say, in the past couple of weeks, gold was really the most exciting pair out of all of them. That was obviously also the most manipulated one because we had a lot of Trump manipulations. Now that Trump is back in office, we obviously have to be aware that all of these manipulations are going to be expected. And moving forward, also for the rest of the year, I can definitely tell all of you that you guys should expect pretty much the same volatility and the same market manipulations that started ever since Trump is back in office. Like, of course, when we had Biden, everything was sleeping. Not because Trump himself would be any sort of uh, big market mover. Like obviously he's just the same puppet as Biden would be, but of course the people behind him, for some reason, it does tend to make a much larger market manipulation, like we have seen it back in between 2016 and 2020. Absolutely major market manipulations, and ever since he got out of office, things have been getting much slower in terms of less manipulations in the market and less unexpected manipulations. So before we get into some details here with some future expectations, let's first go and see how the things we have spoke of so far were happening and how our expectation, of course, been working exactly as we were expecting it. So I'm gonna pull up my chart in just a moment. All right, all right, so I got my chart up and it should be visible. So let's just recap the things we spoke of course, by taking a look at this past recording that was recorded on the 15th of May. What was the expectation here? Gold, so just a brief recap. Gold was reaching a very significant psychological key level. Once that has been happening, we noticed a major rejection. And from that point onwards, we had to understand the market will always be going back towards the rejection candle's opening price. And once that happens, it is going to be exploding. That's how the market nature is going to be working. And that's also what we've seen, because as we had in our previous expectation, let me just show you which rejection candle is that. So if I'm gonna just show you how this was visible previously. All right, so yeah, this is it. So basically, at this time, when things have been rejecting to the upside, there has been this massive rejection kind of being seen, and it has been visible. And as I explained, what the main market nature is going to be doing for you is anytime you see that major rejection can in the market, it is going to be creating a point of reversal back to the opening price of the rejection candle. And once that is happening, plus you also got other reasons for the market to move higher, which I'm gonna touch base in a second. But the main point is here, and the main concept for you is whenever the rejection candle is seen, the opening price of that candle is the area where the market is reversing back to. And once it reverses back to it, that's where you're interested to get involved in the market. So that's exactly what we see here. As previously when we spoke of this, obviously more than a week ago at this point, this main level of the rejection candle is going to be your interesting area, because that is building the point of the new support resistance. What we've seen here previously, you might have not been taking action here on the bottom, and you might have been missing that move. And I can tell you that I did actually miss a move here on the bottom. But once the daily time frame, and especially the higher time frame it is, the better it becomes. Obviously, any type of concept we are speaking of, the higher time frame you're looking at, the stronger it does actually become. So the higher you go in the time frames, the more you can trust something to happen. The lowest probability is always on the lower time frame. That's why a lot of times scalping traders and sort of the short-term traders, lower time frame traders, like I'm speaking of the 1 minute, 5 minute, those kind of things, those are pretty much the most unprofitable traders, because of course anything on the lower time frame is naturally going to be much lower probability. Like, who knows what, maybe someone is profitable in short-term trading, and I can totally say that maybe in scalping too, some people might be profitable, but on the long run you're just never going to be profitable as you would be on the high time frame, because as the market nature is working, and you should definitely also take note of this, as the price action nature is working, lower time frame is way less probable, even if you're looking at the same concept. Like, there's the saying that the market is having a fractal nature, and what that means is any concept is most typically valid on any time frame. And if you're speaking of the same concept, it will pretty much be working the same way on the 1 minute time frame as it would be working on the monthly time frame, daily time frame, or whatever higher time frame you're using. But of course, it is not the same probability. It is always going to be much higher on the larger time frame. So in this case, this being a daily time frame candle, this rejection move and also the opening price of that rejection candle is indeed going to be the main interesting level, because that's a very strong time frame. Plus, at the same time, we also got the concept that the rejection candle itself is indeed going to be the next point of support resistance. So yeah, that's exactly what happened. And as far as that goes, it's not really something to overcomplicate from here. Really as simple as that, whenever the market is indeed going to be creating that very large candle with a top body and a smaller, a much larger wick on the bottom and a smaller body on the top, kind of looking at this illustration, same thing as here. This opening level here, this point is going to be your interesting area. And once we go back there, it is going to be your level of interesting retracement. And once we reach it, as far as all of the other things I'm matching with it, which of course is not just randomly this concept, you also got to have the surrounding logic behind it, and of course you do need to have a comprehensive vision of the market, of actually confirming that the market is indeed going to be moving higher. As far as you can do that, which in this case it was actually confirmed, because I can tell you on the fundamental side everything was bullish, on the technical side also everything was bullish. But once those things are further telling you that things are indeed moving higher, you're confirming this candle as the opening price of the rejection, and that's where you're interested in it. So really as simple as that explanation is, nothing really to make any more complicated. Let's speak of the market execution here, because of course that was something we did mention at the time of speaking of this trade. So how were you supposed to take action on the position? As I mentioned in a meeting, and if anybody is interested, you guys can also go back to this previous meeting, 15th of May, and you guys can also hear the things I have been saying there. So we had two type of ways to take the trade. One of them is pretty much just placing the trade right away on the time frame as it is. You place the trade, you're going to be using a big stop loss. But of course, in that case, your stop loss is just too big. So it will be like 400 something pips. And if you're trading a small account, you might not really have the capital to manage the risk. So if that's the case, that a such large stop loss is not really favorable to you, you might want to be using a smaller stop loss, which is, I would say, it's somewhere in the 100 pip range. And you're able to get that 100 pip stop loss on the lower time frame. So on the lower time frame, we are speaking of like anything below the H1 time frame. And in that case, what you would be interested in, and like I mentioned in the previous meeting, I'm just kind of reiterating myself and repeating the same thing. If the market is going back to that level, you're going to be identifying the point of entry on a different setup. So you're kind of just using it as a higher time frame main ID, and you're using the ID to kind of get this sense of where the market is heading towards. But of course, if you're swing trading, it's not an issue to take a large stop loss. Like, do not be afraid to have a massive stop loss. It's not an issue. A lot of swing traders are going to be doing it. And of course, like, some people might be arguing with it that a large stop loss is not really good for you, or you shouldn't be using it. Like, anybody who would argue that, I can just guarantee that whoever argues that the stop loss size is required to be a certain pip, or you cannot have it this big, or you cannot have it that big. Whoever is arguing that, I guarantee that person is not profitable, because as you understand how the market nature is going, a lot of times you cannot go against the stop loss the setup is giving you. Like, of course, if the setup is giving you a stop loss, you just gotta stick with it. And it's not really necessary for you to get a certain number of pip stop loss. Like, it's not an issue if the stop loss is bigger, but of course, it just takes more time for the trade to progress. It's going to be much more a long-term trade. The take profit also has to be bigger. So, you have to balance it a bit, and you have to have kind of a fine line between something that is logical and also something that is that might be too big. So there's of course a fine line between the logic and also the you know something that wouldn't be working for you. But like I mentioned, if the setup is giving you that, it's not a problem to take it that way. So really in this case, we have two types of setups. Either just wait for the candle, wait for the double confirmation, or just take the trade as is. And that's it. All right, so other than that, I think this is very clean, and probably there's no further need to be bragging of another winning trade, because of course, I think if I'm not mistaken, any live stream we did on YouTube, we only had winning trades. So we're gonna of course have plenty of other winning trades too. It's not really important for me to be just speaking of something that already happened. So let's now go and speak of something else, which is going to be, how do I expect the market to be moving after this? Because, of course, I do have a strong expectation. And just to make things as easily understandable as possible, we gotta understand the US government itself, and especially the people behind Trump, who are, of course, or who are purposely creating all of this massive manipulation in the market. They are 100% heavily invested in gold. And all of this pullback that we have been seeing in the past was nothing else than just a pullback for them to be getting into further buying trades. So am I further bullish for the next upcoming weeks and also the next upcoming months? Absolutely, I am. I'm 100% bullish long term. For the rest of the year, definitely bullish. But we gotta keep in mind, how is the market currently moving right now? What is the time of the month? Can we still expect the market to be further pumping next week, or can we expect a pullback? And I'm going to explain that in just a second. So, just as a quick recap, as I mentioned, all of this movement to the downside, it's nothing more than just letting those institutional investors to get involved in the market at a much better price. And of course, this has happened. Now it's time to be pushing to the upside. But we gotta understand one main important thing here. If we are looking at the calendar, we gotta know that right now we are towards the end of the month. What is happening at the end of the month? Every time a new month is opening, a new month is a new performance for investor portfolios. And as the month is progressing forward, the more they want to keep the profits they have been making. So the way you got to imagine it is the further down we go the month, the higher chances of something previously being profitable for them is going to be closed to take profit. So that being said, because of course the past week was completely bullish, and guess what? Next week is going to be the end of the month. So obviously, if those institutional investors have been profiting, they might want to be closing a very good performance in the month. So as we go into next week, the higher the chances become of the market making another pullback more to the downside. Because those institutional investors who just got involved in the market here at the middle of the month, and guess what? This was literally at the middle of the month. It was the 15th. That's going like through half of the month. Now they have already been in a pretty decent profit. So indeed, it is getting high probability for this to be slowing down a bit. Most potentially next week, we are going to be seeing a more slow price, most potentially moving more within this range here, roughly within this range. And of course, I would be less bullish on it for the moment. For the moment, I will be just holding myself back a bit and making sure I'm seeing how the next week is panning out. Once next week is happening, I'm gonna be able to tell you a very confident direction in the market. But all the way up until we are going into next week, you gotta understand these investors are indeed going to be closing out those profits. Because of course, like every month they want to show up a good statement. And the monthly statement of these investors, it has to be profitable. So for that reason, more consolidation expected next week. And I do have some ideas. I will not go into too many details right now of a next opportunity and taking a trade like that, because the purpose of this meeting isn't really to give a signal right now. It's not about giving a trade signal. It's about mostly recapping the things we have been speaking of last week, and also some further expectations moving into the next week, so we can expect how these investors are thinking logically. So sometimes it's very important to have a logical mindset that is thinking the way these investors are thinking. And I can tell you that if you have a profitable month, you want to also retain those profits. You want to make sure to save those profits. So that being said, let's just look at the economic calendar. How is the rest of the economic calendar progressing? Today, we pretty much had all of the important news events published. Tomorrow, nothing interesting. So let's just go and take a look at immediately next week, which is very much only important event is going to be FOMC meeting. But at that time, it's more of what they say. Cannot really predict anything right now. I'm going to be watching the live meeting of the chairman of the Fed, how they are going to be speaking of it. And after that, it is going to be possible to be determining it. But one thing I can definitely tell you is they have already said it in the past. They are not really interested in changing the interest rates. So I do see this FOMC meeting tomorrow quite insignificant in my opinion. It doesn't seem to be that important for now. But of course, I'm just gonna make sure to stay mindful of it. However, like I mentioned, they already said it. Like they already said it months ago. They are not interested in changing the interest rates all the way until they are seeing how the trade deal and also the tariffs are going to be affecting the market. So that's going to be for next week. All right, guys. Quick meeting. a bit of recap, also some very valuable education regarding the rejection candle, how to execute and understand these rejection candles, and of course, very casual trade, easy as that. And how better you can prove something is working unless you're doing it live. So guys, I appreciate the meeting, and I'm gonna catch up whenever the next live stream is going to be. This week I'm mostly a bit off with the meetings. I've been traveling a bit, so live streams are going to be probably more active during the next week. All right, guys, I appreciate the attention and see you guys later. Have a good one.